Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. I've got Scott, or AKA Win Moon, on the channel today from Sow and Reap Capital. Hopefully, he likes me joking around like that. I don't want to get him all mad or anything, but don't forget to click the like button, thumb up. Don't forget to comment below if you guys like this stuff. Just a FYI. So, Scott, what is happening in uranium? What's going on? What's your opinion?
Uranium is looking absolutely fantastic. So we've got what is it? It's 31st of August today, and we're about to put in a massive monthly close. I'll share my screen with you. So we've got the CCJ chart right here, and we've got very fat looking green candle. Again, that is fantastic, isn't it, Andy? So
I
I mean,
It looks ridiculous. Scott, this
looks
this is
ridiculous.
this isn't when moon, this is when boom.
Or is it when Uranus, as you see here?
Yeah, when Uranus.
I don't know if we'll just go to the moon, to be honest. I don't know if we'll just go to the moon, Andy. Like, I think this
I,
is like, I mean, it's
I, you know, it, the way that chart looks, if you look at those last two candlesticks, they are very large green. I call it the green army. The green army's coming. They're putting in these big
yeah,
fat candlesticks as it goes up. So to me, that looks ultra bullish. Throw a downtrend line going across, it's broken out. Anything you do trend
yeah,
line wise, yeah, that any of these trend lines they've broken,
yeah.
and if we can break out of this cylinder, it's gonna be it's gonna be
Look,
ridiculous.
I thought this was a key level resistance here as well because you've had multiple hits here. And I think if you
Yeah, it
zoom
is.
out, you might have had.
It
If
is.
you look at this chart, if you go vertical, and we've talked about this like maybe a couple of months ago, Andy, but we said this is probably a key level here because we said monthly chart. If we look at monthly chart, right? We
Mm-hmm.
were talking about how many hits there were. Like around here, we acted as resistance, support, resistance, resistance, resistance. And then we didn't really break out properly this time around, but we could be breaking out of this like huge line going across on a monthly basis. And this is a solid close with the volume picking up. I mean, I know with the volume only picked up halfway throughout the month. So, if you look at the volume here, I mean, that confirms the breakout. So I am getting mega bullish uranium. I mean, I've always been. I don't know if you can get any more bullish than I am on uranium, but I think I'm getting more bullish day by day. And also the reason why I say this is because if you look at this pattern here, and I know we've talked about the Livermore's bullish cylinder many times, but this looks incredibly similar to some of the other patterns that I've seen in the past. And so that includes Southwest Airlines. If I just put it into monthly time frame and just go to this Livermore bullish cylinder here, that pattern is incredibly similar to the CCJ pattern, which I will try and overlay for you and try
So
and give
that's
you.
that's love's pattern. You're
Yep,
showing everybody some love is what you're doing.
that's right. All right, so I'm gonna show you the love. Oh, all right, let's see. And here, so that pattern here, if I overlay it as close as I can to this pattern here, I mean, we could be there. Like, I mean,
Yep.
we could be. I mean, we've talked about this before. When we were here, we are like, oh, we could be breaking out. It wasn't quite there yet. I
Yep.
don't want to jinx it or anything, but I mean, the number of hits between LUV, the love chart, and this is incredibly similar. And if the fractals show us anything, if the fractals of the love chart show us anything, then we could be headed for triple digit gains. And this is just not the love chart. Okay, MSI, I posted this a couple of times before. But this Motorola chart, and everyone talks about, oh, it's a telecom company. How can you compare it to the uranium company? All I'm saying is this is the genetics of the chart, as you always talk about, and this is what the charts are showing, what the potential move, the next move can be. And so if I just go copy that again, stick it into CCJ chart, I'll just delete this. Oh, this is, hold on. Let me work on this very quickly. Okay. So the number of hits that we've had. Ooh. Okay, maybe this chart is showing us maybe we could come down for one last time. But nevertheless, if we were to break out, this chart is also telling us the next leg up could be another could see our CCJ over triple digits. So I think the fractals of CCJ is telling us that the next big leg up is huge.
Agreed.
So we could be going nuts. And then do you want to talk about the BTC chart that we've just talked about before we started recording?
Yeah, the Bitcoin chart and the lead in. So if
Yep.
we look at Bitcoin and we pull that up, and I just brought this up as a example, we were looking at the move in 2014, which was a lead-in move to a very much a larger move behind it. So the lead-in pattern was 2014 for a massive move behind it. I just asked Scott, I said, well, what if 2007 was a lead-in move to a larger pattern that comes behind it? Like it was a warm-up game for a big, gigantic move that's coming in, let's say, an energy crisis where we have short oil, short natural gas, short all these things, and then everybody runs at uranium. So you could take that entire pattern there and overlay it over 2007, the lead-in pattern of 2014, and then see what happens next to see if this pattern aligns with a overall larger bull market than what most people are even thinking. So what Scott's doing is he's shrinking this pattern up so it aligns with the other patterns here. So and the weird, scary part is they align very well. All of the movements and the interactions between the buyers and sellers here, they align very, very well. And I think what's coming is a gigantic move potentially in uranium.
Yeah, this is probably close enough. So what you're seeing in the BTC chart is basically the leading pattern that we've talked about previously on the show, on this show.
And can you show just can you show just the lead-in pattern what we're talking about?
Yes, the leading pattern is this. You have the initial run up, you flatten out, and then you go boom, and then come down like this, almost come down to the to this level here, and then you go boom. And the next the boom that comes after it is humongous, like this.
Yes.
And we've showed it through multiple charts, right? Just to make sure that it's clear. So NXM we showed last time.
So the just to let everybody know, what we're gauging is the human behaviors behind the charts. These charts that we're comparing is the psychological herd mentality that everybody has. So it can happen in any type of industry. We're not comparing a tech company with a commodity company. What we're doing is we're comparing humans trading in a system versus humans trading in a system on different time frames. And they create these patterns over and over and over and over. So what we're doing is we're comparing the psychological herd mentality from one instance to another instance and comparing how humans interact with each other. That's really what we're trying to do. We're trying to gauge what the humans in the market are painting and scribing out in these patterns. And that's why we're getting so bullish, is because some people are going to look at it and say, oh, it's not at its high. It's not breaking out of its highs yet. We're not focusing on breaking out of the high. We're focusing on valuations and the psychological herd mentality of the patterns that they're creating, which are a prelude to a massive move higher later. So what are the humans telling us from herd mentality in these patterns? What are they showing us in history, and how is it comparing to today? That's why it's so important to look at this. And what Scott's doing is he's taking these herd mentalities and saying, this is what it scribes out, and this is what it looks like compared to what we are today. And it's scribing out the same pattern, which is, in my opinion, hyper ultra bullish. Put that in the description link, comment section. Hyper ultra bullish uranium. Hyper ultra bullish. Yeah. All right. So what do we have here, Scott? We've got another lead-in pattern.
So this was the leading pattern. I want to try something actually. So this is the leading pattern is you go initially up, you go sideways for a bit, creates a huge huge, I guess, support for the chart. Go up really quickly and then come down slowly, come back to this level, and then you go boom.
As long as the
That's
market
the leading
conditions are
pattern.
good, it goes boom.
Yes, as long as yes, and the fundamental for the company is good. I want to try something actually, Andy, because what I'm looking at is the Fibonacci. I want to see if this works. This could work.
You know it's going to, Scott.
Oh, beauty. Look at this. Okay, so I found something new. I mean, I've looked at a lot of these leading patterns in the past, and what it tells me is that it goes up to the 3.618 Fibonacci, right? A lot of them. Okay, so this is a Bitcoin chart. So I've just done the Fibonacci from this high to this low here, and then the 3.618 was pretty much its high. Okay, so I will go back to the NXM chart. I'm pretty sure I saw here.
Okay. I was going to say try Motorola or one of those other ones that you're comparing. Yep.
So
what do you think? It's going to do it?
Yeah.
What's your guess?
I think it's
going to do it. It's going to do it.
Look at that.
There it is.
618. So 3.618 Fibonacci. Okay, but it's not just this. I've seen this across many charts where when you put in this pattern, you do 3.618 Fibonacci, right? So I mean, it doesn't always happen. It's based on probabilities once again. But let's just try then. Let's just delete this, and you've seen the pattern. So this is what Andy and I are saying is this could be if we just make it clearer and put it on a monthly time frame. This could be a gigantic leading pattern here, based out here, go up really rapidly, come down, and the downward slope is slower. And so if we were to take this high, let's just do
it's going to be ridiculous, guys. It's going to be ridiculous. Get ready.
And go down to this low. Okay, let's see. We could be looking at 186 in CCJ. And what's the craziest thing about CCJ, I think, is, I mean, people talk about as if, you know, that's ridiculous, right? But imagine CCJ. So CCJ right now, how much did they earn last quarter? So they've earned, okay, let's not look at their earnings because obviously their earnings will bloat out massively as their revenue bloats out. Because the profit they will be making, because their costs won't change that much. But if uranium prices were to go to a very high level, let's say $300, right? Their profit margins will bloat out, their profit will bloat out, everything will bloat out. So let's just look at their revenue. And their revenue was 1.17 billion. Let's assume a price of uranium of say $40, right? Or $50, right, per pound. Let's say that does 10x. Let's say uranium goes to $500 per pound, right? Which is not impossible, I don't think. I mean, I would say it could go even higher, but let's say it goes to $500 per pound. Their revenue suddenly, and this is based on lesser production than, let's say, 2017, as you can see, in decline in revenue, because obviously uranium prices went up since 2017, and their revenue came down because they were cutting down production because of low uranium prices. But this is 1.17 billion here. Their market cap right now is 11 billion. So if uranium prices were to go 10x, they will be trading at 1-to-1 PS ratio at these levels. So if they were to maintain, if you wanted to maintain this level of PS ratio, they can indeed do 10x, right? And that's the beauty about this commodities type of stocks, is that the underlying commodities and the price of them can really drive the stock prices a lot higher than people imagine. So I think, yeah, I think you're right, Andy. I think we might have that leading pattern here for CCJ on a longer term, much longer term monthly time frame.
And that's where I think people lose perspective, is because they're so zoomed in. And I've thought this a long time ago, guys. Like, I've been comparing these charts for a long time, and I always kind of bring this up to people, like, well, what if the 2000 bull market was a lead-in pattern to a bigger bull market? And they're like, well, nah. I'm like, well, look at gold, look at some of these other things, look at the inflation and where things kind of go out of hand. 2008 was kind of where it went out of hand and stuff in terms of money printing. So I don't know. It may not be, it might. Now, if you knew this information, if you knew this, Scott, what would you be doing? You'd probably be going back to the previous bull market and measuring the size of that lead-in pattern on absolutely everything to see what the lead-ins were. Because if the lead-in is the size of the fractal is a determining factor of what 3.618, up above is, because it's the size of the fractal that determines that, then that means that we already have the genetics of a lot of these companies based off of the previous bull market. And that's exactly what I did on my findingvalue.com channel on one of the posts I have, is I took that fractal and I was comparing fractals of all these different companies in oil, in uranium, and then I basically developed plans or developed strategies around those companies to invest in them for this next bull market. Some of them I got in very, very good entry points. Other ones I've been a little bit later on, and just because I didn't know the company at that time. So I'm basically accumulating a portfolio of all these gigantic fractals, and you can also use the fractal that was created before this lead-in run-up. So I'm using both of those fractals in this big lead-in run-up. So that's the way I'm playing it. And I'm also looking at the balance sheets. I'm looking to make sure that they've got incomes and stuff like that. And sometimes they don't have incomes and it's more speculative, especially in the uranium sector. So what else, Scott? What else you wanna talk about here? We've got the lead-in pattern, we've got the fractal sizing, we've got a bunch of uranium stocks that look ridiculous. They're coming up with these large green army candlesticks that are looking absolutely excellent. What are you looking for in the short term to basically to ensure that this market continues higher? Like what kind of traits are you looking for? Is any resistance levels we have to break? I know we broke the CCJ resistance level. What about like a smaller company that's more exploration? Are they, like, you don't have to show the chart, but let's just talk maybe perhaps companies real quick. Our leader is CCJ, right? You'd say that's our leading company, our largest company.
Yes.
And the progression of money flows into this is going to start with the leader, and how's it going to progress necessarily through all these companies, you think?
So it's always going to be the leader first. I think CCJ and the mid caps can still outperform over the next couple of months, which is what happened during the last cycle. But then once CCJ went into this cheater mode, and what I mean by that is once CCJ started breaking out of this and was trading up a bit above here, for example, and I'll show you just quickly. CCJ to DJI is the chart that I really like using. Oh, look at that. That looks beautiful. And
I know it's coming. It's coming right now because stocks are going down. CCJ is going up. We're getting that decoupling. And then the ratio is going to look ridiculous.
Yes. So I think this is where we are, right? So this looks pretty similar. So this would work. There's an initial resistance right here. And then once we blast it through, we look at the green candle. These we didn't have a red candle for like red monthly candle. So this is the CCJ to DJI chart. We didn't have a red candle for like 6 months straight. So this is what could be ahead of us. Fingers crossed, fingers crossed. But in terms of the performance, if I just overlay this to say CCJ divided by mega uranium, and I will just put this on the new pane. What you will see is a surprisingly, relative underperformance of mega uranium up until this point here, because mega uranium is, remember, a much smaller stock. So until this point, so you can see that CCJ's run up, broken out of its major resistance, broken out, and mega uranium still underperformed CCJ for several months until it caught up massively. Let me just put this on MGA divided by, just to give you an idea of the size of the...
And then it went boom!
I know. It did indeed. Okay, let me just put this on. Yes, mega boom. So this is the relative outperformance. So it underperformed by a factor of, it's actually quite a lot. You measure this. Let me just measure it. Forecast. It actually outperformed by a factor of 3 up until this point. So we might actually see bigger caps to continue to outperform. And I think mid caps continue to outperform the smaller caps. But once the gear really kicks in, and this is where I think well, I'm considering flipping some of my producers into a smaller caps. This is the point at which I might do that. But this is where it massively outperforms. So, ready? So, okay. So CCJ, remember, CCJ outperformed Dow Jones by a factor of a couple of times here. Let me just measure it from here to there. Okay, 2.5x. So CCJ outperformed Dow Jones from this point here to here by a factor of 2.5x. Mega Uranium outperformed CCJ by 13x. So Mega Uranium outperformed Dow Jones by how much is that? Like 30 something x?
Yeah, it's ridiculous.
It's ridiculous. And this is what we're talking about. So I think just to summarize, I think bigger miners like the producers and the mid caps, like the big developers, I think can still outperform small miners for a couple of months, but then after that, it's game on for the little ones. I think that's what.
So do you think we should be looking at the developers or the explorers right now? Then, like, what do you think would be a better one to look at?
I'm positioned. Oh, I think I'm positioned quite equally across the board actually. So I've got two big producers, two big developers, and actually I've got three explorers, but they are smaller in position size. So I think I'm spread. I mean, if I'm just talking about my core holdings, I think I'm positioned quite equally across the board. But there will come a time when I sell my producers and flip them over to explorers, I think. And that's probably like a couple of months away. If we do break out of that Livermore bullish cylinder, I'll probably wait for the next leg up. I think it will be a very decent leg up if we do see that. So I'm talking about like 6 to 8 or 5 to 8 months, like continuous run up, relentless run up. And that will be really interesting to see, because once again, Andy, that will tell us how big the last leg up might be, or the last 2 legs up might be, based on the fractals and what the charts are showing us. So I think that's hugely important to observe. But after the next leg up, I think I will be flipping quite a lot of my producers holdings into the explorers, in the hope of much bigger gains. Because I mean, you've seen what the explorers did back in 2000s, right? So just to recap, what the explorers did and what they did in the final year of the uranium bull market, and this is a huge it's mind blowing. Basically, the returns were mind blowing. So let's just go back to our mega uranium. I don't have any of this yet. Hopefully it doesn't do crazy.
I do. I've got it.
Hopefully it doesn't do anything too crazy before I get it. But so you've got mega uranium here. This is February 2005, and literally, I mean, this is when you could have gotten out. But let's just go to the top here. So you've done, within the period of 2 years, right? You've done 32x in mega uranium. That's how rapid the gains might be. But let's say you've taken a haircut here. You would have done 20x within 1 year. So 393 days. And that's how rapid the gains can be for the explorers. It could be life-changing returns within 1 year period.
Wait, you don't normally get that every year? I'm just kidding. I'm kidding.
All right. So Bannerman, right? This is another fantastic example of the extent of gain within a short period. So you've started at here, around here, you've topped here. So that's a 50x within 1 year, 397 days. I mean, this is the type of gain that we're talking about in explorers potentially. And there are other examples like EFA, right? Energy fuels. I mean, this was a classic example from the last cycle. So this is U. And we can go from here to here. 54x within 302 days.
That's crazy.
And Andy, this is actually the leading pattern.
That's I mean, that's Porsche money there.
Ferrari money.
Oh, Ferrari. I'm sorry.
This is the leading pattern, Andy. Look at that. Come back down to retest and boom.
Yeah.
And so hold on. Let me do a measured move of that, because that looks like more than a 3.618 for sure. That's gonna breach it by far. But the thing is, when things are so bullish, like we've seen in the Fortescue Metals chart that we went through last time we were talking to you, and also if you look at like charts like Monster Beverage charts, I mean, they breached 3.618 by far. They go way higher than the 3.618 fib, and so you could be getting out a little bit too early if you try and hit the 3.618. You would have done okay. You would have done okay. I mean, that was the initial resistance there. That is pretty good, actually, Andy.
Yeah.
This 3.618 could work pretty well if we keep our eye on it. Hold on, let's go back. So what I'm trying to show you is this here, down to this level here, 3.618. That was the initial level of resistance. Look at that.
Yep.
So I'm learning new things all the time, Andy. Even as we're recording.
Yeah, that's
So,
the chart where you get a shoulder, head, shoulder too.
Yep, that's right. That's exactly the leading pattern here. Yeah. So who knows? Do you see any big patterns here, Andy?
No, not so much as the other ones.
Not really.
Yeah.
Yep. I agree.
But it could be.
Yes.
You never know.
All right. Let's have a look at
good old Bannerman. Good old Banny. Now that one's got the lead-in pattern right now.
It does.
It has that lead-in pattern like it is clear as day. I've seen it in a whole bunch of uranium companies. But that thing looks ridiculous. This thing's ready to go.
All right, 3.618 is $11.70.
What if you use the whole pattern?
The entire pattern?
Yeah,
so that would make sense, right? 3.618, that looks like a key level of resistance here.
What about the whole lead-in pattern though? When it started from the bottom?
The whole thing. Okay,
yeah. So you start from the lead-in pattern was from 2020, I think.
So here, this level here.
Yeah, right there.
Yep. No, it takes you to something similar. So I think we will look at that level there. It's probably the next level of very heavy resistance. Maybe. That looks like a pretty big level too, but I mean, I'd be pretty happy with that.
Yep.
As the initial leg up.
Yep.
Not saying it will or won't. It's not financial advice. But yeah, I mean, some of these leading patterns are ridiculous. Is there anything else that you want to try the lead-in pattern, the 3.618 on? Because I know you've got plenty of stocks with lead-in patterns. Let's try your boy SM.
Oh, the boy SM, my natural gas company.
Your boy SM.
Yeah, this one's this is a big boy.
This is a big boy, but I just want to try this actually. Oh, it didn't quite get there. Nearly made it. Yeah, so it looks like 3.618 or thereabouts is a pretty good indication of the.
What if it was the large lead-in pattern before? What if that's one big large lead-in pattern, the whole thing?
This whole thing here?
That's the first portion, sideways portion. Then we went up and came back. It's a little bit. It's not as clean though.
That's perfect. Look at that. Look at how clear this is. 3.618 is right bang on the previous high.
Yep.
Like this is not consistent. I mean, some charts, like when I go through them, they amaze me because of how well it works in terms of like these Fibonacci levels and things like that. Yeah, so I think crazy things are coming for uranium. I see so many leading patterns right now across the uranium charts. Yep. Anything else, Andy?
Do you think this is the beginning of the big move?
I don't want to jinx it, but I think it is. but I said that last time. I had it wrong, so I could be very wrong. I thought last time when we were testing like the upper channel of the CCJ's accumulation cylinder, I thought that could have been the beginning, and obviously it wasn't. But I mean, we've got the huge fundamental push behind us as well. I think.
Yep.
I think this week just alone, like so many things were happening in the uranium space. So we've had like Elon Musk promoting nuclear power. You've had like Pippa Stevens come on, like, was it see, or some mainstream media talking about nuclear. We had Jim Cramer saying that he doesn't like uranium.
That's good.
Because
That's good though.
I know it's
And we
awesome,
need
right?
him to like be opposite of us because then it'll
I
work.
know. And so I think we've got all the fundamental push. We've got obviously the UF6 and SWU that's gone up. I think Steve on my channel was talking about how he thinks we're going to see a huge bump in uranium prices in August, I think a couple of months back, because of the uplift that we've seen in SWU and UF6 prices. And normally the U308 prices lag a couple of months behind. And so Justin Young talks about it all the time, how that, right now they will probably need to try and sort. This is the time when they will need to try and source a lot of uranium. We've got Spot back online. They've raised cash and they're going to be buying pounds above ground. I don't know how much there's left. I don't think there's much left. And then we've got the huge push by all these different, I guess, countries. Like, so Japan just came up with their plans of, restarting nuclear reactors, and the Prime Minister wants to hurry it up, basically. We've had India, one of the biggest power generators, come out and say they're going to drive nuclear power. We've got China, like, accelerating that nuclear reactor building program. So I think we've got all the right fundamentals behind us. And we've got ESG fund that's probably going to pop in. Obviously, nuclear is now classified as a green source of energy. And we've got that. We've got ESG credit that's going to be introduced through the Inflation Reduction Act in the US. I mean, we've got huge drivers everywhere. I mean, this is just crazy. And we've had Bill Gates come up with the TerraPower story, the $750 million raising. And as soon as the SMRs get built, they will need to go out and source uranium, or even before that's all built, they will need to go out and source uranium, right? And with SMRs, because they use helio, it's very, very, it requires a lot of U308 front end, right? So I feel like we've got the push. I feel like we've got the push. We've had also, I think, uranium was mentioned on Wall Street Bets yesterday, on the front page of Wall Street Bets. So the Reddit crowd might be getting ready for uranium. And if we start properly breaking out, because we know that they are momentum chasers. So if we properly break out now, then who knows, right? Anything can happen. So I think this might be it. Like, I mean, I don't want to jinx it, as I said, but I think this could be it.
Yeah, but you have an opinion. I don't think it'll jinx it or do anything. It's coming no matter what, whenever it wants to come.
That's true.
And
yes,
you guys, let me know in the comments section below what you guys think. I know we've got mega uranium boom down there, but what about, like, do you think this is it? Do you think we're going to head up on higher here, or do you think it's going to take a little bit longer? I don't necessarily know. I do think it looks really good, like it wants to go higher here. That's my take on it. So I think that it's primed to go, but I've been humbled many times before. That's why I buy on the dips and hold on. So let me know what your guys' opinion are in the description link. And if you give your opinion, definitely give me a thumbs up to help the whole algo thing going on, and to let me know that you enjoy the clip. So what else, Scott? Got anything else?
The next leg up could blow everyone's mind, in my opinion, especially some of the mid caps, and I'll show you why. Like, a lot of the charts right now is testing 200 weekly moving average, and I personally think we could be like down here somewhere with a lot of the uranium charts. Like, this is a weekly chart. This is a weekly chart. And I think the fundamentals support it. The price of uranium right now supports it. And in that, what I mean by that is we've seen a lot of positioning. And I think this is hugely important. I've seen a couple of tweets, reply to some of my tweets saying, why isn't the spot price moving up higher? Well, the answer to that question, I think, is that the smart money, the big institutional money, is positioning in these uranium stocks. And I've seen this so many times that it's not funny. Through my investing in like precious metals and all those things, I always see the stocks, the mining stocks move first. They lead, especially the bigger miners, especially like CCJ, Paladin Energy, and so on. Like these bigger names always lead. That's smart money positioning in these stocks. And then how easy is it, Andy, to push up spot prices of uranium? Like, I mean, it will be like walk in the park for these institutional funds
It'll
to
be
try
like-
and spot it.
They're just pushing it forward.
Exactly. Exactly. So what they want to try and do is position themselves. And I love it how the spot prices aren't really moving. I love it how the Sprott physical uranium trust hasn't moved as much as the uranium stocks, because what that means is we have plenty of fuel left for the stocks when the money flows into these spots. And we all know about the flywheel effect of the Uranium and the URA ETFs. And we also know how it's almost like a flywheel effect in that with the physical uranium with spot, people put in money, they raise cash, they go out and buy more, and then that raises the price of the spot prices of uranium, and that attracts more retail investors. They pile in again, and then that raises more money, and they go out and buy. So it's almost like a flywheel as well. When that starts happening, and when people see uranium prices go crazy, I mean, I think there's just going to be a pile of money that come into this space. And I think we could see price actions that look very similar to this. And we talk about the fractals here, but the fractals of this chart is very similar to the fractals that we see in some of the uranium charts. And what happened after it hits? Okay, let me just do a measured move, right? Just to try and demonstrate my point here. So that was a 665% move, right? Let's just go to something like Elevate. Now, I don't know where I should be measuring from, but let's just say I'm going to measure it from here. So 500%, right? So it's similar. It's not exactly the same, but it's similar. But if I go back to this LTR chart, oops, wrong one, and measure what it did after it hit the 200 weekly moving average. I mean, if I measure it all the way up to here, okay, let's just go to a shorter period. That's a 35x within 581 days, just over a year and a half. I mean, this type of move would honestly not surprise me. And once again, it's not a recommendation to buy a year later or anything like that. But this is the time. This is what the patterns are telling us. The fractals, the genetics of the charts are telling us that this type of move is possible in uranium stocks.
Okay. So that's what we've got there, guys. That's a huge move over that time frame in a very short time frame.
Yep.
So all right, guys. I mean, that's all I can do since we've got some kids up there. They need me. So Scott, anything else? You know, I appreciate you coming on the channel. Really appreciate it. Thanks for coming on. Definitely, guys, hit up Sow and Reap Capital. Check out their website. Give a thumb up for the content, guys, and we'll catch everyone next time. So, thanks, Scott.
Awesome. See you, everyone.